A contractor walked into my office last year with a profit and loss statement showing $380,000 in revenue. One line, construction income, 380 grand. He runs residential remodels, commercial fit outs, and a service van. The books told him nothing about which one was actually making money. I spent years running a 150-person retail operation across 7 states, 24 million a year in revenue, and I learned the hard way that you can have a clean set of books with every transaction recorded, every total adding up, and still not be able to answer the question, where is my business actually making money? Our bookkeeper handled the books like every other small business. One income line, one cost line, and one bottom line. By the time we had figured out which stores were carrying the others, we'd already made the wrong staffing decision. Today we're going to walk through the 5 red flags that say your bookkeeper is doing the same thing to you. Then I'll show you what good looks like. And stick around to the end. There's a 6th bonus flag that makes the keeper or not call black and white. Let's go. This is what that contractor's profit and loss statement actually looked like. One line of income, construction income, $380,000. Underneath, 3 lines for cost of goods sold, materials, labor, and subcontractors. They're each one number. No breakdown, no segment, no way to look at the report and answer the question, which part of my business is making money? But this contractor doesn't run one business, he runs 3. Residential remodels, commercial fit outs, and that service van that does the small repairs. 3 completely different businesses with completely different margins, completely different customers, and completely different problems. They share a truck and a bank account, but that's the only thing they have in common. When his books treat all 3 the same, he can't tell which one is profitable. Maybe commercial is carrying him. Maybe service is bleeding him. Maybe residential is the only thing keeping the lights on and he should stop bidding commercial entirely. He doesn't know because nobody set the books up to show him. Quick aside before we get into how to fix this. If you're sitting there wondering whether your bookkeeper is doing this for you, I built a free Bookkeeper Scorecard. 10 yes or no questions, takes 2 minutes, and it tells you exactly which gaps you've got and the dollar cost of each one. The link's in the description. Now back to it. Accurate means every dollar in is recorded as income, and every dollar out is recorded as an expense, and the totals at the bottom are right. The IRS is happy, and your accountant has what they need. Useful means the same dollars are sorted in a way that helps you make decisions. A construction company doesn't sell one thing, you sell new builds, you sell remodels, you sell service calls, you sell concrete, you sell exteriors. Different customers, different pricing, different costs. If those sales all land in one income line, your books are accurate but useless. They can file your taxes, they can't help you run your business. The bookkeeping word for this kind of breakdown is segmentation. In QuickBooks Online, the feature is called locations, though you can rename it. Different software calls it different things. Divisions, departments, business units, profit centers, same idea. A tag on every transaction that lets you slice your income statement by the segment that earned it. Here's a quick sidebar so I don't lose anyone. Segmenting your profit and loss is not the same thing as job costing. Job costing tracks individual jobs while they're in progress so you can catch a problem on a single job before it kills your margin. That lives in the project section of QuickBooks or in your project management software, and you look at it during the job, not at the end of the period. What we're talking about is the big picture report, your monthly profit and loss, the year-end profit and loss, the thing your bookkeeper sends to you on the 15th. That report should be telling you which parts of your business are working and which aren't. Here's a quick reality check before we get into the 5 flags. Your bookkeeper can only sort what you give them. The construction-aware setup, segments by service line, the materials separated from subs, certificates of insurance tracked, that part can be done right, but it only works if you give your bookkeeper clean inputs each month. Which job belongs to which segment, W-9s and certificates of insurance from your subs, receipts coded to the right job. Now I know that's real work on top of running the business. Here's the payoff, and it doesn't take a year. Next month's reports show you your margin by segment for the first time. By the end of the quarter, you have enough real data to call which segment to lean into and which to back off from. Your bookkeeper isn't the scoreboard, They're the person putting the scoreboard together. They can only work with the data that you bring them. Here are the 5 red flags. If your bookkeeper is doing 2 or more of them, they don't understand construction. Red flag number 1, your income is on one line or 2. Whatever you sell, residential, commercial, service, new construction, remodel, it all collapses into construction income or sales. A construction-aware bookkeeper gives you a profit and loss with a row for each segment you actually sell. There's 2 ways to set it up: a separate income account per segment or one income line tagged by segment. We like to label our segments divisions, which builds a profit and loss by division. We use the division approach with most clients. It's cleaner to maintain and it has the same breakdown on the report. Either way, you can finally see which segment is growing, which is shrinking, and which one is making you money. Red flag number 2, your cost of goods sold is one bucket per category with no segment behind it. Same contractors books, material $312,000, labor $180,000, subcontractors $95,000. You can't tell whether the material bleed is on the residential or commercial. You can't see the gross margin of each segment because the costs aren't broken out. Now here's the upside of the division tagging approach we just talked about. When every transaction carries a division tag, your costs roll up by segment automatically. The same profit and loss by division report you saw on red flag 1. Red flag 3, your subcontractors are all mixed in with your materials, or there's no separate subline at all. Say you paid an electrical sub $8,000 and it got coded to materials. Now your materials look bloated and your sub spend is hidden. At the year end, nobody probably knows who needs a 1099 because the subs are buried in a bigger account. A construction-aware bookkeeper keeps materials, labor, and subcontractors as 3 separate lines at minimum. Red flag number 4, there's no system for 1099s or certificates of insurance. December rolls around and the office is scrambling to collect W-9s from every sub you paid more than $2,000 to. That threshold just went up in 2026. It used to be $600, but the workflow still matters for every sub on your job, not just the ones over the threshold. Worse than that, you've got subs working on your jobs without an active certificate of insurance. If something happens on the job, your insurance company audits you and reclassifies that uninsured sub as your employee. I've seen the premium adjustment on these audits land in the tens of thousands. A construction-aware bookkeeper has a workflow, W-9 on file before the first invoice gets paid, and a certificate of insurance on file with an expiration date that gets tracked. Red flag number 5. The reports show up, nobody explains them. Your profit and loss lands in your inbox on the 15th. You glance at the bottom number, file it, move on. Same as last month. A construction-aware bookkeeper sits down with you for 30 minutes, once a month, phone, video, in person, doesn't matter, and walks you through what changed, what's getting better, what's getting worse, what you should do about it. Reports without a conversation are just paperwork. Now let me show you what the opposite of all this looks like. This is the CFO Dashboard in Project Tools. Real numbers, a sample company. We have our overall margin, our work in progress income versus the progress, work in progress cost versus job progress, our budget consumption, our collection rate, and our backlogged months. Each one is color-coded. Green is healthy, yellow is caution, and red is a problem you need to fix right away. As you get comfortable reading these, the dashboard adds more. There are 3 tiers, the starter, intermediate, and full CFO. They scale with you to meet you where you are in your business. Now here's the part that ties directly back to the 5 red flags. We shipped a feature called Business Units. The owner picks a label that fits how they think about their business. Could be divisions, could be locations, could be stores, properties, specialties, cost centers. There's 11 to choose from. You pick one that makes the most sense for you. Then you list out what those actually are. For this contractor, I'd pick divisions and I would select residential remodels, commercial build-outs, and service and repair. Now when I create a new estimate, we'll call this one the Whitfield kitchen remodel. I could choose the division, and when I select residential remodel, that single tag flows through the estimate to the project when it's accepted, the invoice when it gets billed, the receipts that get captured against the job, and the bills that come in from the subcontractors. And here's where all your hard work pays off, back on the CFO dashboard. I could filter by division. I'll pick residential remodels. And now the gauges, the per job table, and the margin numbers, all of it is showing me just the residential side of this business. I switch over to commercial build-outs, different gauges, different jobs, different story. This is the same data the contractor was looking at on the one-line P&L, but it's now sliced into parts that actually let him make decisions about his business. We've also included a segment performance dashboard that gives you this view in a little bit different way, broken down as a table with some bar charts. Here we can see what each is side by side, and if there's anything that hasn't been tagged, it'll show up here where we can quickly move to it and add a tag if needed, and then we can export right to Excel. I'll show you exactly how to set up divisions in Project Tools and run a profit and loss by division, start to finish, in a follow-up. I'll link it below. If you're not using Best Decision Project Tools yet, and you're using QuickBooks Online, the equivalent feature is called Locations, and in QuickBooks Online's advanced settings, you can rename it to Divisions so the reports read the way we just talked about. You do need QuickBooks Online Plus or higher. Essentials doesn't have this feature. Ask your bookkeeper to turn it on, set up a division for each segment of your business, and tag every income and expense transaction with the right division. Once that's in place, run a profit and loss by division report. It's the same view we just looked at on Project Tools. Now here's three things you could do right now without buying any software. First, pull up your last profit and loss, count the income lines. If you only see one or two, your books are too lumped to tell you anything useful. Second, sit down for 20 minutes and write out the actual segments of your business. Residential remodel, commercial build out, service, new construction, whatever the real cuts are. Most contractors I work with have between 2 and 5. And 3, send this to your bookkeeper and ask one question. Can you set up our profit and loss to break out these segments going forward? If the answer is, what do you mean by segments? Or we don't usually do that for a company your size, that's your 6th red flag. If you want a structured way to grade what your bookkeeper is doing, I built a free Bookkeeper Scorecard. 10 yes or no questions. It takes about 2 minutes, and it tells you what each gap costs you per year. The link's in the description. Everything I just showed you, from the health gauges, the business units, the division filter, it's all inside Best Decision Project Tools. It's the same place your team captures receipts in the field, clocks in and out of jobs, and runs estimates. It's built for the business owner who knows the work but is learning the business side. The link's in the description if you want to look at what it costs. Now, 2 quick things to recap before we wrap. The free Bookkeeper Scorecard is in the description. It's the 10 questions, 2 minutes, and you walk away knowing exactly what your bookkeeper is missing and the estimated dollar cost of each gap. Subscribe so the next video shows up in your feed. And one more thing, fixing all these 5 red flags makes your books useful, but the moment you start getting clean job data, you hit the next problem. One missing receipt that breaks every bid for a year. Watch this video next.